Hello and welcome to Moneylife. This is Sucheta Dalal. Today we are going to talk about the government's plan to privatize IDBI. Is it a much needed move? Absolutely. There's one major question. At what price will the government be able to sell IDBI? Now, let's look a bit at the history. So the government wants privatization. It's been talking about this investment for a very, very long time. In fact, 17 months ago, the Cabinet Committee on Economic Affairs actually granted an in-principle approval to say go ahead with privatization of IDBI Bank. It's only on 7th October that the government finally invited bids from potential bidders. It's called on what's called a preliminary information report. And these bids have to be submitted by the 23rd of December. So you could possibly have a new owner for IDBI Bank sometime in 2023, hopefully as early as possible. The reason I say hopefully is that we as a country have already paid too high a price to keep IDBI Bank afloat. In fact, it is pretty scandalous. There have been repeated bailouts by the Exchequer. Then we roped in the insurance, Plymouth Life Insurance Corporation. It was literally asked to take over IDBI Bank. It became a 51% owner. Has to stop. This just can't go on, and I'm going to explain why. So let's start with the government. It's a good thing that they are determined to divest IDBI, hopefully early next year. And will it find takers? Yes, it may. I mean, after all, the managing director of the International Monetary Fund, Kristalina Georgieva, recently said that India remains a bright spot in an otherwise dark horizon for countries around the world. So our economy not doing great, but better than everybody else. So we are an investment opportunity. People still look at putting money into India. Adequately cleaned up IDBI Bank, showing some profit. I'm going to explain how. It's got a network of 1,884 domestic branches, 3,400 ATMs. This should attract investor interest, especially foreign institutional investors, which now want to take big stakes in banks. Bank licenses, according to me, will continue to be scarce. Yes, we know that the RBI has announced an on-tap licensing policy for universal and small banks, but please notice, received 11 applications, 6 have been processed, all have been found unsuitable, and 5 are still under examination. So nobody's going to get a license in a hurry. In any case, they don't want to give licenses to large corporates. I don't know if it's going to change for 2 big corporates, but that's the position at the moment. So the big question about IDBI's divestment is at what price can it be offered, and what other concessions and assurances will be demanded by potential investors. Remember, they're not industry houses. Now, to understand the problem with IDBI Bank, we need to understand a little bit about its history, its parentage and everything. So let's talk about recent history. Life Insurance Corporation obediently came to IDBI Bank's rescue, obviously at the prodding and prompting of the Finance Ministry. None of them admit this. It has repeatedly infused funds to bail out the bank after the RBI placed it under what it calls prompt corrective action in 2017. What is prompt corrective action? It's a lot of restrictions on the bank's operation, and it's a way of forcing the bank to follow austerity measures, be more accountable, and find a way to come out of the hole. Many banks don't. They end up being taken over, sold off, or whatever. Now, LIC is a key player clearly over here. It came in with 51% holding. It bought the shares at 61 rupees, but it's not the main decision maker because it's the government that's going to decide. How much has LIC invested? 21,600 crore for the 51%, which I told you was acquired at an average price of 61 per share in 2018. In 2019, it pumped in another 4,793 crore, mainly for IDBI Bank to be able to write off bad loans. This was in addition to a hefty 21,157 crore injected by the government since 2015 as bailouts from the Exchequer. And Nirmala Sitharaman, the Finance Ministry, has said this herself to a news agency in 2019, just after yet another bailout, which is included in this, of 4,557 crore. Now, uh, it didn't stop at that. Another 1,435 crore was raised through qualified institutional placement. Again, for what? To get the bank out of the rut and this prompt corrective action. Do the numbers. All these amounts add up to a stupendous 49,000 crore without taking into account the sale of very valuable investments that IDBI had for decades. That means everything that's been happening around this bank is sell everything that you have. I'm going to come to it a little later. Just find a way to get out of this mess. And this mess repeatedly kept sliding into things because of bad corporate lending. It's been in trouble so far. There have been arrests. Nothing changes. So privatization is essential to IDBI Bank. This burden on LIC also has to stop. And remember, LIC may have come in at the finance ministry's prodding, but in nearly 2 decades, about 17 years of IDBI being a bank, before that it was a development finance institution, it is now under LIC. So it starts as the Apex Development Finance Institution and ends up in 2022 as a subsidiary of LIC. For LIC, it's like an albatross around its neck. Because remember, LIC itself has gone public and investors are not happy with it. So LIC went public in May 2020 by offering its shares at 949. Its listing was below that offer price. That offer price has never been seen and the stock has been sliding continuously. It was down to 609 today on the 19th of October. Now, LIC's investment in IDBI is another sad story. I told you an average price of 61 and IDBI Bank, after the so-called turnaround and pumping in so much of money, 49,000 crore I've told you, it's still trading at 43.45. Turned around bank, right? Now, Bank Union has already pointed out that the minimum price that IDBI Bank should be sold at is the 61 that LIC paid plus what would be dividends paid over the last 2 years. I don't think that's realistic, but if it actually sells at a loss and doesn't get even 61, not only are, LIC investors going to be very unhappy, but remember, LIC hard sold its issue to policyholders and they're going to be asking questions and it's not fair to them. So, price is the biggest question. Now, let's look at the disinvestment plans. LIC, like I said, today holds 49.24%. The government holds 45.48%, which makes their total holding 94%. Jointly, they plan to flog 60.72, which is comfortably about 51%. The balance, 5.28% is with the public. But even if it sells 60% of this predominantly public sector holding, government will still be a big stakeholder with over 34%. And the story of IDBI is rather strange. With 94% public sector holding in 2019, it was declared a private bank. All this is work towards privatization. So they call it a private bank. It's not a private bank. It's actually a subsidiary of LIC, which was government owned, at least now has gone public. And in reality, the journey since its transformation from a very powerful development finance institution in the 80s and early 90s to a bank has been nothing short of disastrous. In fact, in 2004, this is how it happened. The IDBI had a separate act which was repealed. A new company was set up called IDBI Limited. The entire development finance institution was merged with this new company called IDBI Limited. And then it had another subsidiary called IDBI Bank. So IDBI Limited was operating as a bank. It had its subsidiary IDBI Bank. These two are now merged. And in May 2008, the name was changed to IDBI Bank. So a lot of convoluted work went on to get to this stage. It should have consolidated, stabilized, focused on organic growth. No, it was in a big hurry to grow faster. So it showed interest in acquiring United Western Bank, which had been placed under, which is hugely loss-making and placed under a moratorium by RBI. Why should IDBI, which hasn't found its feet, want to do this? We don't know. But they had serious issues with integration, bad loans, and it has and hardly any benefits of organic growth. So it has been hobbled right from the start when it became a private bank. Over the next decade, things just went from bad to worse. Focused on corporate loans, no accountability. Every big bad loan had IDBI playing a big role. You can see that in the bankruptcy court even today. It racked up more and more bad loans and more losses. Every time it was in serious trouble, here's the government coming in to bail it out. And I never stop repeating this, but when the exchequer bails out a bank, it is large corporates for getting their loans excused. And this money comes from what should be spent on health, welfare for the poor, and other policies for the poorest of people. In fact, in February 2016, a banker writing under pseudonym said, the rot has spread faster in IDBI Bank due to too much of easy money coming from the government for too long without any heads rolling. And that has continued. There may have been some CBI action, but there is zero accountability and questions asked even today. Now, what is the position today? After this 49,000 crore has been pumped in and all the other money I talked about, the bank has actually posted a net profit of 1,359 crores in FY 2021 as compared to a huge loss of 12,887 crore just the previous year. So it's been organized and dressed up. All the bad loans are fully provided for. Government funding and LIC funding. So 96.9% of the bad loans are provided for. So this should make it attractive for any institution that comes in as a suitor. The business portfolio has been rechecked a little bit. They say we're doing better. We don't know all of that because this window dressing doesn't last more than 2 or 3 years. And I don't think anybody wants to take a chance. Frankly, yes, they've grown retail loans. They've increased mortgage financing. They've reduced corporate lending. But the real story behind the turnaround is massive capital infusion and sale of a series of valuable assets. Remember when IDBI was a development institution, it was the promoter of a large number of organizations, including the National Stock Exchange, which is humongously profitable. IDBI sold its entire NSE stake and made a lot of money on it. It's also divested its investment in NSDL e-governance infrastructure. It still holds NSDL, the depository. It also sold Aegis Federal Life Insurance Company, Asset Reconstruction Company of India, and its stake in Stockholding Corporation. It also sold a lot of real estate assets. This is the amount of money which should have come into this public company, which has just gone to pay for the losses. And when you are talking about a bank, whose losses are they? The losses of business and corporates, dubious corporates, deliberate defaulters, right? And the bank hopes to now hive off another further 12,000 crore of bad loans to the National Asset Reconstruction Company and reduce its gross bad loans by another 14%. Is this all enough to get the price that it wants from high quality investors? We don't know. What we know is that the government is doing a few things right. The government has gone on a roadshow before this preliminary information memorandum. It has spoken to people. It's tried to gauge what their concerns are, what they're willing to pay. It's also focused on the quality of investors. So the document asking for expression of interest says, if you've been convicted, have any adverse orders about serious offences, make a declaration, you'll be most probably automatically disqualified because there are clear rules. You have to be fit and proper to be given control of a bank because it's a repository of public savings and public trust. Now, this behavior is a big contrast to Yes Bank, which happened just a couple of years ago. So when Yes Bank was run to the ground by Rana Kapoor and RBI stepped in to find bailout, it looked at SBI and certain private banks. That time, a bunch of foreign portfolio investors wanted to come in. The RBI and the finance ministry wouldn't answer their questions, legitimate concerns, and some of them walked away. In fact, I have written at that time that one deputy governor even said, we don't need them at this stage. All that has changed even for Yes Bank. But Yes Bank has been a big success story. In fact, it has turned around in less than a year. Now, the good thing this time is that the government, when it's talking about IDBI Bank, has approached the same investors, TPG Capital, Carlyle Group, Fairfax Holdings, and had discussions with them in the run-up to this expression of interest. Big contrast with how it treated them when Yes Bank happened. After that, it's had another success, which is Lakshmi Vilas Bank, which was sold to DBS India, a subsidiary of Development Bank of Singapore. Both these have done fine. Good sense has prevailed, and now we are looking at where the money is rather than pull it from the exchequer and divert money that actually should go for development from India, or even look for bailout from Indian private banks. That's a ridiculous thing that happened once. It cannot happen every time. But look at IDBI's own history. From the time it turned into a bank, it's poor accountability. It's a checkered history. It's got a long culture of very low accountability. And this will remain a concern for anybody who comes in. The bigger worry is that between LIC and the government, they will still hold 34%, which means they can interfere. Government, when it's a big holder, always interferes. The bureaucrats do. And with over 26%, can actually block special resolutions. So potential bidders may want some assurances on that. They may demand additional support. And this has to be answered, because I can't see anyone paying the price that the government would want without this. To my mind, the bottom line is do what is required. IDBI Bank needs to be privatized. There's no option. You cannot keep bailing it out from the exchequer. The cost is just too high. And like I said, the only beneficiaries are large corporate defaulters. While we slip, we have no employment, the hunger index, we are doing badly. And these are the people who are allowed to sponge away the money that's badly needed for healthcare, education, and just feeding the poor. So if you agree with this, please circulate this, subscribe to us, spread the word, and let's hope the government makes it happen in 2023. Thank you.